Welcome back to the Higher for Longer podcast. My name is Mason, and today we are going to pretty much just go through my Bloomberg and go through my Twitter and read some articles and try to draw some conclusions about what's going on. Just kind of fun thought exercise, give ourselves a little insight into the markets today. And right off the bat on my Bloomberg, we have an article titled Fed Officials See Rates Close to Peak, Differ on How Close. And this article is directly important because this is central bank policy, and this is something that I track in my own personal investment thesis to try to get an idea of market cycles. After running through the article, it pretty much covers a couple Federal Reserve members, and it's talking about how they believe we are roughly in a restrictive enough area with the federal funds rate at 5.5%, that it is likely to see, if any, very few rate increases, but they don't forget to throw in that they believe that they will have to hold rates at this level for a significant amount of time. And the reason that that is relevant to us as investors, that means that we are not just going to get immediate rate cuts as the market was pricing in before we started to have the curve begin to re-steepen. It's still inverted, but it has started to re-steepen. Up next, we have an article that covers Eurozone industrial production unexpectedly grew in June. So the reason that this grabbed my interest off the beginning is because industrial production growing unexpectedly is very against a lot of the things that I've seen lately. Increasing production obviously means that there's more resilience. And this is interesting to see over in Europe. I'm not a huge person to be able to talk to you about Europe, but any growth in this global economy is interesting to see. So let's go ahead and give this article a read. So this one was actually very quick. It's pretty much just a chart with a little bit of a description. Pretty much all it says here is that this was a beat on expectations, and the expectations were 0, and the unexpected increase is by 0.5%. So yeah, just a small beat here. I don't think this is really that significant. It will be interesting to see if this were to keep surprising to the upside, then that would be something worth taking note of. But the economists predicted that the euro area output will only see a meager advance over the rest of the year. So unless this starts beating repetitively, nothing really to worry about there, it looks. Alright, so here we have a article. It's pretty much just a markets wrap from Bloomberg titled NASDAQ 100 drops 2% as yields rise before Powell. What they are referring to with Jerome Powell is his speech tomorrow at Jackson Hole, which I will be covering. This video may come out after his speech is delivered. Let's go ahead and give this one a read just to get a little insight into what happened to markets today. Looks like a couple things actually took place. Alright, so a couple juicy details right here. We have the S&P wiping out its weekly advance, losses in the NASDAQ top 2%. One interesting thing here is the 2-year yield climbed above 5% today. So a move in the 2-year that's interesting to see, and that's interesting to see it within 0.5% of the shortest of the short end. With the target range being 5.5%, it's still 0.5% off, but it's definitely moved closer. Tesla and Apple dropped at least a little over 2.5%. Nvidia pretty much did nothing on earnings. Pretty much says that the market already reflected that it was going to have the earnings that it had, and that, let's see here, Max Wasserman, sorry if I pronounced that name wrong, even says, and I quote, "Let's take a little profit before the Fed throws cold water on it." So I guess we will have to watch what Powell says tomorrow, and this article even moves into that. So I'm gonna give that some coverage, as well as an article titled "Turning into Powell's Jackson Hole Speech, Washington Edition." So let's get some insights into old Jay Powell and see what's likely to come tomorrow. His speech is scheduled at 10:05 a.m. Washington time tomorrow. So you're probably going to see this video after he has had his speech, but still worth some coverage to at least I can get an idea. Alright, so here's an interesting perspective from Andrew Brenner, head of international fixed income at Nat Alliance Securities. He says, "The question is whether we see Powell sticking to higher for longer, or if we see Powell being more defensive on rate cuts." So if we see Jerome Powell really staying hawkish, that could have some volatility on markets. Alright, so that article really didn't give as much as I was hoping to. It kind of just talked about how Powell is likely to have to walk a fine line tomorrow, and anything that he says is likely to have some sort of effect on markets. I do think that's a good point, but the last FOMC press conference barely moved markets at all. So it will be interesting to see if Powell says something that can make the markets actually move, and I don't think he'll make markets move in a good way. I think that anything he says, I think more of the volatility that would come would likely be to the downside. Because rate cuts, while yes, that sounds great on paper, the reason that they would begin to cut rates is because they see something bad coming in the economy. And the market would then have to figure out what is it that they see. And that could likely lead to downside. But also, if he comes out there and just says, we're going to keep rates high, we might raise more, you could have more volatility to the downside, just based on the fact that I don't think the market is ready to... If Powell were to come out tomorrow and say that he is going to do more, I don't think the market is ready for that. So I guess a good point there, and tomorrow will be very interesting. I will definitely be covering that event, and I'm excited to get the video up for you guys. So with everything we've covered here tonight, I'm actually going to go ahead and try to get this video up. That way I can at least have it on YouTube for people to see. So sorry we didn't get to the Twitter today, but I hope you enjoyed, and I hope you found something insightful out of this. If you think something that I said that was my own personal take was completely insane or incorrect, please feel free to leave a comment. I would love to have a discussion with you. Thank you for watching. Any share, like, or subscription is greatly appreciated, and I look forward to talking markets with you in the comments below. Thank you, everyone. Take care.